Welcome to The Explainer. Today we're going to tear apart a pretty powerful day trading dashboard. It's a system that's all about finding those high probability setups by filtering out all the market noise. We're going to break it all down step by step and see if it really holds up.
So here's our game plan. First, we'll get the lay of the land, decode the dashboard's logic. Then we'll jump right into the core of it, this 3-minute strategy they use. After that, we'll see how using a longer time frame can give us a heck of a lot more confidence in our trades. Next, and this is crucial, we'll learn how to filter for only the absolute A-plus setups. And finally, we'll cover how to manage your profits like a pro.
Okay, first things first. Let's really get into how this system even begins to make sense of all the chaos in the market.
If you're a day trader, you know the feeling. That constant flood of information can be totally overwhelming. The real trick isn't trying to watch everything at once, right? It's about finding that one reliable signal, that thing that cuts through all the noise and shows up again and again, day after day.
So what this system does is pretty clever. It takes all that market chaos and sorts stocks into these different windows. And each window is basically a filter, scanning the market for a very specific rules-based pattern. So instead of a mess, you get a clean, actionable list of potential trades.
All right, now we're getting to the good stuff, the absolute core of this system, the full banana strategy. And yeah, you heard that right. This is where the magic really happens.
So the person who came up with this has a pretty fun name for it, the full banana. It's basically a metaphor for a price candle that's solid, reliable. It tells the real story of a stock's momentum, unlike some other time frames that can totally lead you astray.
And this image, this is a perfect illustration of why this matters. Think about it. A 5-minute candle can look amazing for 4 minutes straight, and then, bam, in the last 60 seconds, it completely tanks, faking you out. A 3-minute candle helps you avoid that trap because it captures the action between those key 5-minute moments. It just gives you a much clearer picture.
So why 3 minutes? What's so special about that? Well, it's all about getting a strategic edge. It confirms a trend faster for us, and maybe most importantly, it helps us stay off the main battlefield where all the big trading bots are playing their games, just waiting to trip up traders like us on the common 1, 5, and 15-minute charts.
And the best part about this strategy is just how simple it is. You're looking for this little consolidation at the open, where the second and third candles basically stay inside the first one. Your entry is a clear breakout above that range, you've got a defined stop loss, and a standard 1% profit target. It's totally repeatable and mechanical, which takes a lot of the guesswork out of it. But look, even a really strong signal isn't always enough to risk your hard-earned money, right? That's why this system is so smart. It adds another whole layer of confirmation, using a longer time frame to really double-check the strength of a move.
Okay, now this is where you really see the power of that confirmation we were talking about. The system hunts for similar consolidation patterns, or inside candles, on the 15-minute chart. And all inside candle means is that the whole price range of one candle fits neatly inside the one before it. Simple as that. We get one potential setup at 9:45 and an even tighter one at 10 a.m.
So this table just lays it all out for us nice and simple. The 9:45 setup just needs that second 15-minute candle to be inside the first one. But the 10 o'clock setup, it's even stricter. It wants both the second and third candles inside that first one. And notice the precise rules for the entry and the stop loss for each. It's all spelled out.
Okay, lean in for this one, because this is super important. This is one of those details that can absolutely make or break your trade. The setup is good to go as long as the candle body closes inside the range of that first candle. The wick, the little tail, it can poke outside all at once, but it's the closing price that matters. Don't let a long wick scare you out of what could be a great setup.
Okay, so we have the 3-minute signal, we have the 15-minute confirmation. Now, how do we put it all together to find those absolute A-plus trades? This is the aha moment.
See, a really great high-priority trade, it's not about just one signal. It's about everything coming together at the same time. It's convergence. You need it to pop up on the 3-minute window. Check. Then it has to get confirmed by a 15-minute pattern. Check. And finally, it's got to have that high volume. Check. When all three of those things line up, that's your A-plus setup.
And here we go, a perfect case study, the stock Entelopus. It was like the stars aligned for this one. It showed up in the 3-minute window, the 15-minute window, and the high-volume window. That triple confirmation, that is the holy grail of this strategy.
And this just drives home that closing basis rule we talked about earlier. It's so important. I mean, look at that thing. The second 15-minute candle on Antelopus
formed what's called an inverted hammer. Most traders would see that bearish shape and run for the hills. But because the body closed inside the range of the first candle, the system correctly identified it as a high-priority opportunity. You got to trust the rules, not just the candle shapes.
Okay, so you've done the work. You found a high-priority trade. Awesome. Now what? Now we get to the final piece of the puzzle. How do you actually manage this thing and take home some profit?
First off, the system keeps it simple. Your standard target, your baseline, is a 1% gain. That's it. It's a clear, defined goal that helps take all the emotion and greed out of the equation, which, let's be honest, is where a lot of us go wrong.
But here's where it gets smart. It adapts. If you're breaking out of a really significant level, like yesterday's high, just aiming for 1% might be selling yourself short, you know? In those more powerful setups, your target shifts up to the next major level of resistance, like the monthly high. And then, when a stock punches through that monthly high, it enters what traders call open territory. And that's exactly what it sounds like. Blue skies. No recent resistance to slow it down. This is where the monster moves can happen.
So the advice here is simple, but it's absolutely crucial for your bottom line. When you're in one of these strong trends, don't just grab your 1% and bail. Instead, you trail your stop loss. You let that winner run and see how far it can go.
So let's wrap this all up into a simple workflow, a step-by-step game plan you can actually use. First, you scan for that initial 3-minute setup. Then you filter for those priority trades using the 15-minute and volume windows. Third, you enter based on the clear rules. Fourth, you manage the trade with a clear target. And finally, if you've got a huge winner on your hands, you trail it to maximize those gains.
So there you have it, a complete, rules-based framework for finding really high-quality trades. The system is there, the logic is sound, and it takes so much of the guesswork out of it. The only question left is, what high-priority trade are you going to find tomorrow?